In today's stock analysis, we are going to examine the key pillars, look at past results, see what the analysts' predictions are, create a valuation, and review then rate the company. Today we are going to look at Arista Networks, ticker ANET. Let's dive into the process I follow when reviewing whether or not to invest in a company. After I've collected all the financial information, I then analyze what I consider to be the 12 key pillars. These pillars are based on the insights and teachings of the best super investors and what I consider to be the key metrics when evaluating a company. Ideally, we would like to see each of these metrics achieve or exceed a specific target. Companies can earn 1 point for fully meeting the target or 0.5 points for coming within 2% below the target. The first pillar is earnings per share growth. This is where we take the net income and divide it by the shares outstanding. For Arista Networks, earnings per share growth over the past 12 months is 35%, exceeding the 10% target, scoring 1 point. Next, let's look at free cash flow growth, which measures the money a business can generate from its operations. Warren Buffett emphasizes the importance of strong financial health and prefers companies that can generate substantial free cash flow. Arista Networks' free cash flow growth is 82%, far exceeding the 10% target, scoring 1 point. Next, we come to revenue growth, which tells us how good the company is at generating income before deducting expenses. Arista Networks' revenue growth is 18%, exceeding the 10% target, scoring 1 point. Now let's turn to book value growth, calculated by subtracting total liabilities from total assets to indicate equity growth for the company. Phil Town believes book value growth is the most important metric, as it has the interest of the shareholders at heart. Arista Networks' book value growth is 37%, exceeding the 10% target, scoring 1 point. We then assess the management of the business by looking at return on invested capital and return on equity. These measures allow us to evaluate a company's efficiency at allocating capital. For Arista Networks, return on invested capital is 29%, and return on equity is 29%, both far exceeding the 10% target, scoring 1 point for each. Now we move on to debt. Joel Greenblatt prefers companies that are able to pay off debt with their free cash flow within 3 years. Arista Networks has zero debt, meaning it does not require free cash flow to pay off obligations, scoring 1 point. With the information we have gathered, it tells us that aspects of the key pillars are solid, but let's explore the company further. Now let's look at the remaining key pillars which help define an excellent business. Let's look at the gross margin, which indicates how much money a company retains after incurring the direct costs of producing its goods or services. This is currently at 64%, exceeding the 40% target, scoring 1 point. Next, we come to the operating profit margin, which tells us how much profit a company makes on a dollar of sales after production costs but before interest or tax. Peter Lynch prefers companies with strong operating margins when assessing their financial health and competitive advantage. Arista Networks' operating profit margin is 42%, far exceeding the target, scoring 1 point. Free cash flow yield provides a more realistic view of a business's financial health. Terry Smith prefers companies with a free cash flow yield of 5% or higher. Arista Networks' free cash flow yield is 3.45%, falling below the target, but scoring 0.5 points. Next, we assess the 10-year book value growth as potential shareholders. For Arista Networks, this is 32%, exceeding the 10% target, scoring 1 point. Lastly, Bill Miller believes earnings growth is the biggest indicator of a company's stock price. Arista Networks' 5-year net income growth is 32%, exceeding the 10% target, scoring 1 point. In the description, I've included a link to the investors page and the annual report if you want to check it out for yourself. Arista Networks has demonstrated strong fundamentals in key areas, including revenue growth, return on capital, and operating profit margins. Additionally, the company carries zero debt, which is a major strength, reflecting increased demand for cloud networking solutions and AI-driven infrastructure. As of today, the stock is trading at about $83. Over the past 3 months, the stock has been on a downward momentum, since the high of about $130. Over the past year, Arista Networks' stock price has been steadily increasing, due to strong financial performance and market expansion. Looking at the overview, we can see the current market cap is approximately $105 billion. They are currently generating $2.85 billion in revenue for the trailing 12 months and have 1.26 billion shares outstanding. At present, their earnings per share tell us that for each share of stock, the company is generating $2.23. Their price-to-earnings ratio is 37.38, which is slightly higher than the S&P 500 average of 25.88. According to Morningstar, Arista Networks has a wide economic moat due to its dominance in cloud networking solutions and strong competitive positioning. The overall consensus among analysts is a strong buy, with a 12-month price target of approximately $113. Analysts are forecasting an average EPS growth rate of 17% over the next 4 years. Let's calculate a valuation. I will use Arista Networks' current earnings per share of $2.23. Combining historical growth rates and future analyst predictions, I estimate an earnings per share growth of 20%. Assigning a forward price to earnings ratio of 35, projecting 10 years forward, and applying a desired return rate of 15%, this results in a future stock price of about $483. The current intrinsic value is about $119, with a margin of safety at $89.59. Since the current price of $83 is below the margin of safety value, this scores a check. It all depends on your personal view and outlook for the company, as well as the return on the investment you would like to see. When reviewing the key pillars, Arista Networks scored 11.5 out of 12, earning a check. Over the last 12 months, the stock has experienced strong upward momentum, supported by continued demand in cloud networking and AI infrastructure. However, the stock is currently in a downward momentum, scoring a cross, but presents a buying opportunity. Analysts are predicting a growth rate of 17%, scoring a check. The current price matches the margin of safety value, signaling a check. According to Morningstar, Arista Networks has a wide economic moat, which scores a check. My final overall rating is 4 out of 5 stars. Arista Networks presents strong financial performance, excellent growth potential, and a strong competitive advantage. The only question is, could the price go lower as the market is in a period of correction? Thank you for joining me in today's analysis. Don't forget to like and subscribe for more insights.